Welcome everyone. This video is about March 2021 attempt. We will solve it in accordance with latest tax law for tax year 2023. This particular video is about question 3 of this attempt. Please read the question carefully. The question is of 19 marks. So you should be able to solve it under 35 minutes. Have a look at requirement of question. You are required to compute 3 items: total income, taxable income, and tax payable or refundable. A very important instruction by the examiner is that you are not required to compute minimum tax. For such lengthy questions, planning is very important. A well-planned answer will save your time. Your answer will also appear more organized if it has been planned well. So you should find out first what this question is about. It's about an individual who has a business named AC. It is a manufacturing business. Highlight the important areas in your mind or on a rough page. That's how you plan your answer. The question talks about dividends, and we know dividends are taxed as income from other sources under final tax regime. Question also talks about sale of shares, which means capital gains have also been talked about in this question. Zakat has been mentioned, which means deductible allowances will also be involved in our calculations. Donation to hospital means that tax credits under Section 61 will be required to be calculated. In the end, withholding tax and advance tax have also been mentioned. So we now have a very good idea about the extent of this question. For each highlighted or noted area, you should create a separate working on a separate page. The planning part is complete. Now we start the execution part. Start reading question and fill the information in workings. Examiner wants you to start working from figure of profit before tax. Look for profit before tax figure given above. Rupees 2,468 million will be the starting point. In your working, mention this figure. Look at information of question one by one. If any amount has been deducted from this profit and is not allowed by tax law, then we will add it back to profit figure. First information is about raw materials, which have been purchased but no tax has been withheld while making payment. Recall notes slide for section 21. All such payments shall not be allowed as deduction if applicable tax at source is not deducted while making payment. But there is an exception for raw materials, wherein only 20% of total purchases will not be allowed as expense. Now come back to your solution. Total purchase during the year has not been mentioned in question. So we will calculate 20% of this purchase only, which is 7.8 million. Out of total 7.8 million, only 1.56 million will not be allowed as expense. We will add back the disallowed amount to profit before tax figure. Next information is about accounting depreciation of rupees 2.1 million. This is not allowed as expense under tax law. So add rupees 2.1 million to profit figure. Next information is provision for slow-moving stock. Provisions are created in compliance of accounting principles and are not incurred expenses. Therefore, these are not allowed as expense under tax law. Add rupees 1.8 million to profit. Next information is about Eid party. This is an entertainment expense. Recall notes slide for section 21. An entertainment expense is allowed if it is in accordance with traditions of business and subject to overall norms of business. The question is silent about this fact, that whether this party is a norm of business or not. So we will take our assumption in favor of taxpayer. Refer back to your solution. The expense is in accordance with norms of business, hence will be allowed as expense under tax law. No adjustment of profit is required in this case. Next information is about a penalty paid to a customer. Recall notes slide for section 21. Fine or penalty is not allowed as expense if any violation of law is attached to it. Refer back to your solution and read it again. There is no violation of any law, instead, there is a violation of some business agreement. So it is a normal business expense which is allowed under tax law. No adjustment of profit is required here. Next information is about donation to a hospital established by local government. Recall notes slide for section 61. Donation to such hospital is eligible for tax credit. Refer back to your solution. Donation will be treated as tax credit and not an expense. So first add back the amount of donation to profit, because it is not an expense. Now mention donation amount in working for tax credit. Next information is about reward paid in cash to an employee. Such reward to employee falls in definition of salary under tax law. Recall notes slide for section 21. Salary above Rs 25,000 should be paid through banking channel, and in this question, this requirement has been violated. Refer back to solution. This will not be allowed as expense under tax law. Add back Rs 500,000 to profit figure. Next information is about dividend, which has been added to the profit figure as other income. Recall notes slide for income from other sources. Dividend is part of income from other sources. Also recall notes slide for separate taxation. Tax imposed on dividend is final tax. Refer back to your solution. In order to include dividend in correct head of income, first deduct amount of dividend from business income. Now mention it under correct head of income, which is income from other sources. Zakat given in question will be a deductible allowance. And withholding tax on dividend will be mentioned in a separate working. We will finalize these workings later. Next information is about capital gain on sale of shares. Please note that this is not business income. 60% shares held by federal government means that it is public company under tax law. Recall notes slide. Shares of public company fall in definition of securities. Capital gain on securities is taxable as separate block of income. Refer back to solution now. We will do two things. 1. Remove capital gains amount from business income. Second, mention capital gains under separate working. Next information has been mentioned as other information. This means following information has not been included in profit figure, unless specifically stated by the examiner. First point is about second-hand plant imported from France. At a price of 2.5 million. While importing it, an amount of Rs 150,000 was paid as income tax. This is an advance tax and is adjustable. Installation cost of Rs 375,000 has been included in administrative expenses. Also, the question tells us about tax depreciation, excluding depreciation on imported plant. Recall notes slide for cost of assets. Incidental expenditures are part of cost. This means that installation cost will be included in cost of plant and not as an administrative expense. Next, recall definition of eligible depreciable assets. These assets have been defined through exclusion, and the plant given in question is not one of the exclusions. So imported plant is an eligible depreciable asset. An initial allowance of 25% will be allowed for this plant. A depreciation of 15% will be allowed under tax law. Now refer back to solution. Add back installation cost in profit figure, because it is not allowed as expense. Mention price of plant and add installation cost in it to work out total cost of plant. This is an eligible depreciable asset. Therefore calculate initial allowance at 25%, which comes to Rs 718,750. After deducting initial allowance, calculate normal depreciation at 15%. Normal depreciation comes to Rs 323,438. Add up initial allowance and normal depreciation. This will be allowed as expense under tax law. Mention it as expense in business income. Tax depreciation of Rs 1.9 million has also been given in question. Mention it in your working as an expense. Very carefully read about pre-commencement expenditures. Note the year in which it was treated as accounting expense. 20x0. We are working on year 20x2. So erroneous treatment of pre-commencement expenditure does not belong to current year. So no correction is required in current year in accounting profit. But since this has to be amortized over 5 years, therefore, we will create an expense this year by dividing 3.4 million by 5. So amount of expense comes to rupees 680,000. This working is complete now. You can make its total. Next information is about withholding tax and advance tax. Mention it in your working created for withholding tax. Mention 1.4 million and 200,000. Don't forget to mention withholding tax at import stage on imported plant. Let's now finalize workings, one by one, and mention results in main answer format. Working 1 and 7 is about business income. It is complete. Mention its total in main answer format. Also mention working reference for convenience of examiner. Working 2 is about capital gains. Mention rupees 660,000 in main answer format. Also mention working reference for convenience of examiner. Working 3 is about dividend. We have to calculate gross dividend figure first. Recall formula for gross dividend. Add up zakat amount of rupees 30,000 as given in question. Now multiply it with 100 over 85. Rupees 240,000 is gross dividend. Now we can easily work out withholding tax at 15% on dividend. Withholding tax comes to rupees 36,000. Mention gross dividend in main answer format. Mention working reference for convenience of examiner. Mention totals of withholding taxes in main answer format. Mention working reference for convenience of examiner. Working 4 is about deductible allowance of rupees 30,000. Mention it in your main answer format. Mention working reference for convenience of examiner. Let's calculate total income now. Total income comes to rupees 7,546,813. Now we will calculate taxable income. Be attentive please. This is an important point. Capital gain from securities is a separate block of income and dividend is taxed under final tax regime. Please note that both of these items are not part of taxable income. So taxable income shall not include capital gain of rupees 660,000 and dividend of rupees 240,000. After deducting deductible allowance, we get to taxable income, which comes to rupees 6,616,813. Now we need a rate of tax. Tax rates are always given in exam, so no need to memorize it. 8th slab is applicable here. Use it to make tax calculations. Tax rates on capital gains will be 12.5%. We will use it to work out tax imposed. Tax rate for dividend is 15%. Using these rates, work out tax imposed. Now we need to work on working 5 for tax credits. Recall notes slide for section 61. This section requires to calculate a value C. This value C is lower of amount of donation or 30% of taxable income. Value C is then multiplied with average rate of tax. This average rate of tax is calculated by A over B, where A is tax assessed and B is taxable income. Refer back to solution now. Work out 30% of taxable income. Which figure we have used to multiply with 30%? Can you find it? Yes, this one. Lesser of above will be value C, now multiply it with average rate of tax. Can you find out how this average rate of tax has been calculated? Yes. It's A over B. A is tax imposed and B is taxable income. Now multiply this average rate of tax with value C. There you go with your tax credit. Tax credit is rupees 463,765. Mention it in main answer format. Mention working reference for convenience of examiner. Tax payable is very easy to calculate now. Deduct withholding tax figures to find out tax demand or refund. Make totals of other columns also. There is a refund of rupees 585,381. Congratulations! You did it! Your answer is complete now. You can ask your questions in comments section. See you all in our next video.